you know how it is with technology. But today on the capital markets company review series, we've got Zimre Holdings Limited, which is one of the listed entities on the Zimbabwe Stock Exchange. And to help us unpack the company, what it is all about, and what its business model is, Chief Operating Officer Chakanyuka Nzirazemuka. Chaka, welcome to Capital Markets Company Overview.
Thanks very much, Kuzi. Thank you.
Yeah, so let's get straight into it, Chaka. Probably we always want to know who is running our companies. Probably if you, as the Chief Operating Officer, it's always good to know the background of some of our executives. Can you just in brief tell us your journey until you got to where you are at the moment?
Okay, thanks very much. I guess coming from you, you could easily narrate the journey.
Yes.
Since we were pretty much in the same space, but my name is introduced, Chaka Nzirazemuka. I'm an investment banker by background. I have a finance and investments background, and I pretty much began my career from Mask Stockbrokers, moved through to TN Asset Management, before joining NASA, and then I relocated to Zimre Holdings in this particular portfolio, where I then began doing the corporate restructuring and business strategy until the current space where I
am. Thank you, Chaka. So just tell us, you spoke there about restructuring and stuff like that. What is the structure and the business model of Zimre Holdings Limited as we speak?
Okay, thanks very much, Kudzi. I think, put simply, we coming from a backdrop of being known to be an investment holding company, but the restructuring and the structure or the business model in itself is one way we prize now the control over the wallet of all our SBUs, and by that we don't mean putting our hands in the businesses, no, but being in a position where you can control the cash that is overly generated by these businesses. And you know that being able to manage and generate cash flow, you're pretty much in a good space, because that's the blood of any successful operating business. So our model is really, we are in the insurance space largely, where until recently we now have also brought in control of life and pensions business, which is Fidelity. We also have Emeritus Reinsurance, which is reinsurer by nature, and we also have short-term insurance presence in two fronts. One through Credshaw, which is a direct short-term insurer, and through WFDR, which is a broking business as well. So you find that in one space, our model is to control the value chain in the insurance space. And so we're starting off at the bottom end and all the way through to the reinsurance. And essentially the reinsurance is where we then take the risks outside the country. And so we start off from the bottom all the way through. Then we also have presence in the property sector, where we are again largely in control of the property portfolio. I'm sure again part of the restructuring that we spoke about was to try and regain ultimate control of all properties through the delisting of ZPI on the ZSC, and eventual delinking of the management services and the property portfolio itself. So you now find that the assets are now housed under ZPI as a fund within the business, and so the cash flows directly accrue to our shareholders, because this is pretty much held at holding company level and not held through the other business units. And then ideally you find the service offering side of the business is now a standalone, because we did package that through an empowerment type vehicle. And so the management team that was in ZPI equally runs their own house managing the portfolio for a fee. So there again, you've also managed to manage that particular restructuring by capping the sort of cost attached to managing and running that particular portfolio. So that's the other side of our business. Then we also have what we call private equity. Ideally, this was just a classification for specific interests where we're still trying to also, explore a different value proposition. I'm sure you're well aware that historically, ZHL and CFI, there's been quite a number of stories about that. So you try encounters or investments like CFI, we've placed them in there, but it's more because of the kind of handling that it requires. But essentially, under normal circumstances, where we are in full control of the business and cash in terms of directing strategy and oversight, which we believe we're firmly in a position to do so outside the drama that's always associated. It's a business which equally complements the investment philosophy that we carry. And then we've got other like investments which are in related businesses. On the insurance side, for example, we have interests outside the country in Zimre. We also have interests in the likes of Lidwala, Diamond Seguros, UGI, Vanguard Life, indirectly through Fidelity. And so we've got all those kind of investments, again, being classified under that particular portfolio. But in essence, that's really our model. We also have a new frontier type of space in that particular private equity portfolio, where we're also looking to explore growth in other areas in the economy. So without obviously spelling out where and how for strategic reasons, but we're pretty much trying to expand our wings and find a home for the money that we control.
Thank you, Chaka, for that elaborate description of the business. Quite a diversified business entity you've got there. I know you're probably in a closed period, but without going much into detail in terms of the numbers, where are you seeing opportunities as a business, especially probably in 2021? Where were you seeing opportunities for your business?
Thanks very much. I think, you know what, whilst the economy may be very difficult for many and for all of us really, but the opportunities have been there in terms of even within the insurance space. We've seen opportunities in terms of innovation. Products offering has to be really convenient and relevant to the clientele that is essentially you and me, number one. Two, it's also a value proposition and growth where we're saying opportunities in the assets that are originated to place some of these funds. We've seen that our capital markets largely outside equities, there's nothing else that's really there to preserve capital. And unless people talk about what we all know is deemed illegal, it's also a limited scope in there. But we've seen that there are opportunities, especially when you come in on asset origination and where you have cash flows being generated that equally support the preservation of value. And then we've also seen opportunities when we talk about the agricultural sector. There's been a significant growth in there, although it's equally something that needs to be managed. Mining has also been good. We've also seen pockets of growth in that area. But more interestingly, and which is evident to many, is the infrastructural development and growth that the economy has been going through. For our insurance businesses, that has actually been a very interesting space, because obviously there are certain things that come with infrastructure projects, specifically bonds, and those are very good for making money and also to facilitate trade overall. So the general improvements in some of these areas have definitely created.
Sorry, we seem to be losing you, Chaka, there. Probably if you can, maybe you can try now. Maybe it's stepped down.
Okay, at which point did you lose me?
Yeah, now we can hear you.
Okay. At which point did you lose me?
Oh, yeah, no, you can go ahead. We just lost you briefly. Okay.
Now saying, so infrastructure projects are also another growth point that we've seen. And I'm sure, as you would identify with me is the more we have those, it also improves the general standard of living. And, you know, that equally affects performance when it comes to what people deem excess income. So that might also create opportunities to have improved penetration rates on the insurance market. Property developments have also been another growth area. I'm sure you will note a lot of conversations have been going on with regards to students' accommodation, with regards to cluster developments. Look, it's far and wide that the opportunities in that space have been created, but we're equally looking for very key and strategic diversification of our property portfolio, and we remain bullish about retail developments, and we pretty much in that space where we firmly also have seen and taken advantage of opportunities that have come our way. And obviously without disclosing, but at the right time, I'm sure we will be able to talk to that.
Thank you, and I must disclose that I've got a huge chunk of Zimre Holdings shares, and it being listed on the Zimbabwe Stock Exchange. It's one of the companies that we talk about in the capital markets. If you had to convince me, Chaka, to keep holding on to those shares that I have, what would you say to me as a shareholder?
Okay, well, thank you for having the shares.
Yeah.
Yeah. I think what I would really tell you is, as if you and as a shareholder, as my shareholder, firstly, thank you for actually approving a share appreciation rights scheme for us, your staff. I think that's in the first place a very presentable case for me to say hold on to that share price, because the alignment or the vote of confidence in aligning interests between shareholders and the employees, and essentially it's all employees because we haven't limited it to executive management alone, is you now have significant loyalty of effort and productivity coming through from your staff. And so some of the strategic initiatives and thrust that we have taken out to achieve, you find that there's so much of a vested interest to see those things coming. So for one, you've got a driven team of employees who are really out there to try and ensure that the value that is made trickles down to the bottom line, because that's where also that value is going to be realized. One of the caveats to that scheme is that it's also linked to performance. So whilst it may appear as just an allocation, but some of the realizations of those allocations are also linked to the overall performance of individuals in the business. So as a first base, that's what I would say. As a second one, I would also hasten to say, if you follow the restructuring initiatives that we have done, in essence, what the share price used to consider as a value was something that is more of a fiat type of setup, because it was not exactly within the full control of ZHL. And by that, I really refer back to the scenario of ZPI and Fidelity. I'm sure the conversations would always be like, oh, yeah, no, they have interest in Fidelity, they have interest in ZPI. But what we have now done out of those transactions is that for ZPI, as an example, we have done the full takeover of the properties directly into the hands of shareholders at the group level. And so that really speaks again to the issue of the cash flows generated, profits that will be made, and fees that may accrue out of various property transactions that we may be involved in going forward, coming back into the pocket of the shareholder. Then in respect of Fidelity, I'm also equally happy to say, if you follow the asset separation process that happened, or that was initiated by IPEC a couple of years ago, it has left Fidelity actually being one of the businesses, if not the only one, that is fully separated its shareholder funds from those of policyholders. And I'm sure, obviously, on social media, you might have seen whatever was circulating yesterday regarding a competitor. But what we have seen is that asset separation is equally beneficial to you as shareholders, because now we have clearly defined parameters of where the value is drawn for policyholders and where the value is drawn for shareholders. And we are delighted to actually be in a position where we can see and touch that value. And, you know, in a way, without again also preempting some of the things that will come in time, is that value is now clearly noticeable from the time it's generated to the time and to the moments when it's spent and to the time that it's considered realized for declaration to shareholders. And then also, one of the things that I would touch on is that you also find that there's a lot more cause for you to look at your share price more holistically after this kind of perspective, because whatever we now deem to be shareholder and policyholder interest across the divide is something that is very evident. I did talk to enhancing the value chain of the insurance sector. Small transactions, as they may seem, but they are very strategic in our eyes. I don't know. Can you still hear me? I see a message coming through. Yeah. Okay.
Yes, we can hear you clearly, Chaka. Go ahead.
Okay. Thank you. So one of the things that we've also then done is, I'm sure you noticed that after taking over a business like Fidelity, which in its way appeared to be a group, we have also taken the view to say, how do you integrate all these multiple duplicated roles into a more efficient engine? And so what we've done is we've really restructured the way Fidelity stands and the way it's supposed to focus itself. And by that, I mean, we have essentially brought and collapsed all duplicated shared service structures in one. And so you've got one group service structure, which in essence is serving an entire portfolio of business units. And so we have eliminated scenarios where you have a CFO on one end, you have another CFO on the other. Where you have a group CEO on one end, you have another group CEO at the group. And so in a way, you're really canceling out a lot of things along the path. On the product development side, I think we have again come to the market with a lot of energy. We did initially start off with the UMA model, which I'm sure many people have heard about. But in essence, we have now taken a view to be a bit more aggressive with that and really focusing on capitalized players who you can onboard to drive that agenda. And that is essentially on the short-term side of our business. But we have also viewed that synergies lie across the broad spectrum of our businesses. And so where you find that there are certain advantages to take care of, especially after the acquisition of Fidelity, we have also taken a view to duplicate some of those strategies into the network that Fidelity had created. And so we anticipate a lot more value to come from that. And then obviously Fidelity itself, one of the value points I would say as a shareholder, hold on, is the Southview project. I'm sure you would be aware that that was completed in quotes. A lot of people would have spoken of negative energy in terms of Fidelity could not achieve. But I'm glad to actually say a lot of that has been achieved. And again, we've got something to really come to the fore in terms of disclosing coming in the next couple of weeks. And I wouldn't want to speak ahead of the event, but what I'm happy to highlight is that we have actually done our part. And if you ask residents in the area, they will be able to attest to the activities that Fidelity has done there. And the second last thing is the Langford particular issue. There is a lot of value that is in that particular piece of asset. And whilst there is a lot of drama and that is surrounding it, but we also believe that that value really speaks to the policyholder, and it really has to be protected. And its value, which in its futuristic element will definitely create a lot of potential growth of value through the separated arrangements of shareholder and policyholder administration or relationship going forward. So it's also another value point. I think, let me end there because I guess there are a lot more, but what I would just highlight is that of the things that the market knows, without delving into the private or the closed period kind of information, this is essentially one of the most undervalued counters that I believe is out there, and it's probably a good time to be buying without indicating again whether the price is right or what. But there's a lot of value that we believe lies in ZHL.
Thank you, Chaka. And speaking about valuations, one of your shareholders, I think Sam Tamki, when he realized that I was going to be speaking to you, he was asking me, and he said that let's establish how they are accounting for that land where they have a dispute with CFI. And he says their price to book value is probably below 1. So he wanted to understand why the share price is at cities. But the last question that he said is, let's establish how they are accounting for the land that is under dispute with CFI.
Okay, well, it's a fair question. I mean, the land that is under dispute is, you find that in the earlier times when the asset was acquired, it was obviously on the books. We still keep it, but it's equally discounted to a greater extent because of that particular issue. The rationale behind why we can't really take it out is also because of the basis and the manner in which it was acquired. Everything was above board, and it is just under dispute. So obviously when things are in that state, even when you undertake valuations, you do take the necessary adjustments that you need to give to that particular asset for prudence sake. But we certainly believe that once the A is cleared in the relevant places where it's being discussed and argued, we should then see the full transmission of that value coming back onto the balance sheet. And like I said, it's one of the potential growth areas again that is behind the relevance of the product offering that Fidelity has always been churning out to policyholders.
Thank you. Another question comes through and says that with effects of COVID-19 and more people working from home, how has that affected your portfolio?
Yeah, that's a very broad and good question. I would look at it on two fronts. So on the insurance portfolio of the business, I think a lot of things have actually been very interesting, if I may put it that way. You find that on the short-term side, a lot of people have continued with their policies. Nothing much has changed. On the life side, to some extent, it has equally also brought people to the fore thoughts of, am I covered as an individual? Is my family covered? And what else do I need to do for them? The good part is when you've got a product that really speaks to preservation, at least, of the value that's being contributed, you will get take up. But also in the same vein, it has really also hit us because when you are in that space as a reinsurer, you can't exactly absolve yourself from the market. So a lot of the deaths, high-profile people who would have passed eventually would hit us as a reassurer. And so that has also come through. So those are big payouts. And then you'd find that on the property side, tenancy levels, occupation levels have not declined that much. We have suffered here and there. But where you also find we've had compensation is on the retail space, where you probably have an anchor tenant who is an FMCG operator. I mean, you recall the first reactions to the COVID lockdowns. A lot of people flooded these places and they were buying out. So that obviously meant some revenue growth, for the players. And naturally, depending on the nature of leases that we have, we also saw some compensatory behavior in terms of rentals coming through. Overall performance, we have felt it, but it hasn't really come through in a way that you would say, we're beginning to feel a pinch. It was more to just seeing variations in trends on your revenues, but naturally, they've also then caught up. We have also seen some, improvements over time through either premium reviews or also through naturalization or in the growth in rentals due to indexation of some of our leases. So in a way, I think it has sort of balanced out, but we have noticed some trends. As a business, we are glad to say we haven't been affected directly in terms of our staff, but I think we've also just taken a view to say, let's promote more vaccination within the business and let's ensure that everyone is safe. And we also took on the precautionary measures of working from home and to protect everyone else within the business.
Thank you. And farming is one of the areas that is, especially when you look at it from a government point of view, it's one of the where they say our economy is predicated on. And the question comes through and says, does Zimre Holdings within the group, do you offer any insurance packages for farmers?
Yes, certainly we do offer some insurance products through farmers, and that is done by our short-term business credit show. We've had actually a number of programs we've done for tobacco farmers. There are some that we've done for the wheat and maize farmers. So I think for reaching out, that we can definitely refer you to credit show for that kind of support.
Thank you. And then the last question, Chaka, before we let you go, is which sectors are you targeting for investments going forward? And it says, are you mining, energy, or infrastructure? Which sectors are you?
You will see us a lot more in infrastructure, definitely, because of our property interests. You equally see us in, I'll put it as mining, but most probably not directly as mining, but something somewhat related or a derivative of sorts from that particular sector. Agriculture, again, yes, but through insurance, number one, but also on the private equity side, we might actually take on quite a number of positions in that space. But obviously, I wouldn't disclose what, but all I can say is that we're targeting quality cash flows. And so if something definitely does generate quality and sustainable cash flows for us going forward, without compromising the value for the policyholder or the shareholder, depending on whose funds we're putting in there, we're definitely going to be in that sector as well.
That's Chaka Nziradzemuka, Chief Operating Officer for Zimre Holdings Limited. He was with us this morning on the Kanban's Overview series under the Capital Markets Awards series. And Chaka, thank you so much for taking your time to be with us and explain a few things about the Zimre Holdings Limited.
Thank you very much for having us, Kudzi.
Thank you. And that's bringing us to the end of today's Capital Markets Awards Kanban Overview series. We'll see you next time.
Cheers.